Now, the deadly novel coronavirus that's devastated the Chinese economy is having a ripple effect across the globe. That was what we were reporting last week. As COVID-19 cases skyrocket here in South Korea, not only is the South Korean economy feeling the ripple effect, but it's feeling the direct impact on the lucrative auto, tech, energy, and tourism industries. Not only that, the COVID-19 outbreak is also hurting the small businesses here that shape everyday life in just about every corner of the world. Financial markets got slammed on Monday as investors looked for safety and intensifying fears about the global economic impact of the coronavirus after a surge in cases outside China fanned worries about a pandemic.
Big investors are running for the hills. They're saying, we've made lots of money, we're not going to take a chance. Oh, that the coronavirus can really create a serious, significant negative GDP around the world. Any kind of slowdown, any standstill like that just creates ripples through the entire system. And this is not days, this is weeks.
Now, life under COVID-19 red alert and its economic consequences. The topic of our News in Depth tonight with Yang Jin-suk, professor of economics at the Catholic University of Korea, and Daniel Yu, global strategist at Yuanta Securities. Gentlemen, welcome to the program.
Happy to be here. Thank you.
Now, last time we had you two gentlemen in the studio, we were discussing the possible economic consequences from the novel coronavirus outbreak in neighboring China and its global impact. That outbreak has hit home since then. We're talking about businesses here at home being directly hit. Now, from small mom and pop stores to department stores, from corner stores to retail, huge retailers, not only are we seeing these businesses slow, it actually looks like many of these are beginning to shut down completely. Citizens are advised to stay home. They're advised not to go to public places like the cinemas or shopping malls or PC bongs or private cram schools, you name it. What do we do when consumption slows to such a level because a nation is under disease alert?
Okay, well, I think the government had made a slight mistake last week when they, just before the COVID exploded in Daegu, that we should go all out and consume like we used to. I think that reduced a lot of credibility on the part of the government. So I think right now is not the time for the government to encourage people to go out and consume. And luckily, I think they gave up on that line of attack. I think what they should do, we talked about department stores, some of the larger concerns. I think those companies will be okay if we take some measures after the COVID virus dies down. So we can have things like a sales festival, we can have sales like a tourism drive after the COVID virus settles down. What's really the problem here is the small mom and pop shops. Those will not be able to survive the next month unless they have direct support. And if we are going to have a supplementary budget by the National Assembly, that's what it should be used for. Right now, I think the government is considering the usual measures of extending tax deadlines, extending low interest loans, but I think it has to be more than that because I don't think these firms, small firms, will be able to survive unless they get really direct income support.
Yeah, I think they are thinking of considering bringing the Korean Sale Festa to an earlier date. So I guess the huge retailers will be okay with that measure. Things like that, right?
But I think we should also make sure that whatever decisions we make about timing first has to be done with medical specialists in mind.
Sure.
I think if we pay too much attention to just the economics of the moment, then I think COVID will not settle down, but continue and even expand.
Absolutely. Daniel, do you want to weigh in on this?
Yes, I think the problem with this is that it is a new disease, so people are very uncertain about it.
Right.
The level of the fatality rate is very low, but the spread is very quick, and therefore people are quite concerned about this, and that's why they're not really going anywhere to consume restaurants and movie theaters and everything. So that's why we need to have a quite aggressive supplementary budget. If you look at the MERS incident and SARS incident, we've seen about 7.5 trillion won and 11.5 trillion won of supplementary budget just for that. I think this time around it has to be a lot bigger than that. I think we're probably looking at about 20 trillion won or so. We need to have that done as quickly as possible to support all these mom and pop shop that will be suffering for the next 3 to 6 months.
Now, some South Korean workers at Samsung Electronics, Hyundai Motor are staying home as precautionary measures as corporate Korea scrambles to prevent coronavirus outbreak from disrupting its home market. Now, Samsung restarted production at its home phone factory in Gumi after closing it over the weekend for disinfection purposes, as one of its employees were found to be COVID-19 positive. Now, 6 employees at Hyundai Motors factories in the southeastern city of Ulsan were found to be positive. Now, they were staying at home, with 4 of them linked to a church at the center of this virus. LG Electronics closed its lab in Incheon until Monday after one of its employees there was infected with the virus. Now, these are some of Korean conglomerates with tens of thousands of employees, and as the nation confirms more COVID-19 cases, it's very likely that we'll see more disruptions in the assembly lines like these. How do you deal with these?
Okay, well, as long as the COVID-19 doesn't get worse, I think the conglomerates will be able to recover from this. Basically, I think what they have to do later on is to shorten the vacation days so they can make up the production. So it all depends on whether COVID settles down in about 2 or 3 weeks or whether it continues and explodes. And it's not just in Korea, it's also global. We've seen from the Hyundai Motors incident a couple of weeks ago that even a simple part as wiring harnesses can bring the production process to a halt. And if the COVID virus extends for a lot longer than the next couple of weeks, then not only will we see problems within Korea, but we'll probably see problems that originate from outside Korea with such part shortages like the wiring harnesses as well. So we really can't tell at the moment, but if the COVID virus is contained to more or less what we see right now, then the damage will be handleable. So I think the first priority now has to be containing the COVID-19, not only in Korea, but also globally.
Right. Now, share prices I want to talk about, Daniel. Sure. In Asia, slid for the second day, albeit at a moderate pace today, as investors took a cue from Monday's sell-offs in Europe and the U.S. Now, shares plunged here in Korea up by about 3.9%. That was one of the sharpest drops of any large markets around the world. Shares rebounded by more than 1% today. How does it reflect investor sentiment?
Well, clearly everybody's very confused, right? If you look at the Kospi index, from the peak in January, it has fallen about 9%. That's quite a big drop. From the August of last year, which was the bottom, and to the January of this year, it went up about 20%. So they gave out about half of that return. Clearly, this is because of the coronavirus impact. We are saying or expecting the economy to recover somewhat this year, but obviously people are expecting now the actual growth rate will slow down even further. That's why people were selling the market. But today, I think they have realized that the fundamentally Korean economy is okay, somewhat. And later on, we think that the global economy does recover in the second half of this year because of the recovery from this COVID-19. Then Korea will be quite in tune to show a recovery. So that's why the equity market should do well later on. But for the time being, people are very confused. So huge volatility is expected until we see any signs of the patient increase. It slows down in Korea. Everybody thinking that Korea is following the track of what China suffered in the last few months. So if you see continuation of increase in the patient, then the market will be very volatile. But hopefully we will see very aggressive measure from the government to support the financial market, and therefore that we to see stabilization of the equity market.
Now, the U.S. dollar, Daniel, checked its March higher today as investors sharply raised bets that the growing fallout from the coronavirus outbreak would prompt the U.S. Central Bank interest rate cuts. Now, although the Korean won mostly recouped heavy losses from yesterday, today, still the trend is that the dollar is going very strong, and of course, as well as gold, safe asset. U.S. stocks, gold, treasuries now, and the dollar, they've all surged in 2020. And it's a climb that of all of them going together. Now, that's not typical, is it? What are we seeing?
Well, the question mark is this. If you think that we will suffer a global recession that we've seen in 2008 or even before about 2000, if you see that, then I think that these trends are exactly what's going on. You see that interest rate falling, you see gold going up, all the so-called safety assets will show a price rise. But if you look at the price movement recently after yesterday, we are seeing some stabilization of the gold prices as well as the silver prices. And also interest rates are falling, but to a much lesser speed. And overall, it seems that the safety assets, or even dollar, seems to be stabilizing at around 99 from it's been appreciating gradually in the last several months, but it seems to be stabilizing. So the question mark is, are we entering a global recession for a long period? Or it's going to be a very short-lived correction, and that we will see recovery in the second half of this year. I'm betting on the latter, but for the time being, people are very confused. That's why these prices will be very volatile. In some cases, equity market will go up. Some cases, the safety asset will go up because people are not sure whether this recession is going to be a short-lived or longer-term lived.
Well, hopefully the latter, I'm hoping as well. Now, Professor Yang, President Moon Jae-in has raised the possibility of drawing up an emergency supplementary budget to soften the impact of the coronavirus and the South Korean economy. How big of a budget are we looking at, and how can this budget be used to prop up the economy?
Okay, well, the numbers that are batted around right now by the Blue House and the National Assembly seems to be about 15 trillion won. And that's based on, as Mr. Yu just mentioned, SARS in 2003, the supplementary budget was 7.5 trillion. In MERS 2015, it was 11.6 trillion. Mr. Yu just mentioned that he would prefer to be a much larger 20 trillion won budget. I'm actually of the opposite opinion. And the reason is that we actually have what I call a super duper budget this year. It's 513.5 trillion won. That's 44 trillion won more than last year. So if we take a government spending multiplier, that could add about 57 trillion won or 1.2% GDP compared to last year just from the regular budget. And my suspicion is that that's probably not going to be enough for the entire year. So we'll probably need to have a supplementary budget at the, later in the year. And if we use all our bullets now, that might leave us with a lack of bullets later on. So I would say that let's use the budget that we have to the fullest extent, maybe repurpose a lot of that budget to, as I mentioned, direct income supports for mom and pop shops, and then use the money and then see whether we need an additional supplementary budget, perhaps in the second or third quarter.
Now, do you think perhaps we'll see another movement by the Bank of Korea with another rate cut in this easing cycle later this week?
Mr. Yu and I were talking about that just before the broadcast. Mr. Yu is of the opinion that the interest rate is going to fall, and politically I think there is a lot of pressure for the interest rate to fall. I'm of the opinion that, well, Governor Lee Ju-yeol has said that he's not crazy about letting the rate fall, and that's partially because right now our interest rate, policy rate, 1.25% matches the lowest that we ever had in Korea. If we lower it to 1.0, then we're heading into a new territory, and I don't think the financial people, I don't think the investors are crazy about going into new territory, the undiscovered country. I think, and also, if we go to 1.0, I'm not sure if it'll add confidence to the market because, well, this will be historically the lowest rate that Korea ever had. And instead of making investors more prone to invest, maybe they'll think that is Korean economy so bad that we have to have a historically low interest rate? So right now, I'm of the opinion that the BOK maybe should wait and see whether the situation gets better or worse.
Well, at least Korea has room for that flexibility. There are many other economies that does not have that room to decrease or to ease that interest rate, right?
Right, and that used to be, and we're in a really uncharted territory right now because, well, if we remember about 5 or 6 years ago, people were saying that Korea should never have an interest rate that's lower than the United States. And right now we're about 0.25, 0.5% lower than the United States. because we're in such a low territory right now, I think if the global economy gets unstable, then there is a possibility of a rapid capital outflow that no one wants. So I think BOK will be very careful about lowering the interest rate any further. I think they'll look at fiscal policy to do their job first, and if they see a good opportunity, then maybe they'll lower the rate then, but I don't think they'll be in a hurry to lower the rates anytime soon.
Well, you know, as much as I'd like to hear more from you two, that is all the time we have, and I'd definitely like to invite you to again, but that is all the time we have. Many thanks to you both, Professor Yang Jun-seok and Daniel Yu from Yuanta Securities, for a wonderful discussion tonight. We appreciate it.
Thank you.